Good morning, traders and investors. My name is Roger Scott, and today is Thursday. It is actually Thursday, the 10th of June. It is the second trading week, fourth day of June. It is about 7:30. The market's going to open up in about 30 minutes or so. Now, we've got some big reports today. We've got CPI, which is a really big report because we've got a lot of inflationary pressure on the way, and we've got the jobless claims. Hopefully, if the numbers are good, we're going to see some stability in the bond market. And I started talking about the bond market earlier this week. As you could see here, it has been going higher, and it is now breaking out. Now, I talked about it last Friday, Monday, Tuesday, and I'm talking about it again. And here's the thing. If you look at the bond prices, we are now at the highest level in 3 months. I told you this was going to happen. And this is deflationary pressure, which is actually fairly bullish for the stock market. But the problem is too much deflationary pressure is not good either. We have to be in the sweet spot because the Fed will, if we're running too hot, they'll lower the amount of stimulus. If we're not running too hot or if we're running too cold, they're going to leave the stimulus alone. So it's a real interesting balancing act right now. But the bond market is higher and it's taking the tech sector with it, the QQQs with it, as I predicted it would. And more importantly, it's focusing on the tech sector and also on one other sector that I'll talk about right now. Hopefully, we'll see a little bit of a breakout here. And we are also seeing some upside as a result of this because this is a relief for the smaller cap stocks. So we are seeing some upside in the Russell, and I expect that to continue. There is a negative correlation right now between interest rates and the Russell 2000. Now, usually there is an inverse relationship between stocks and bonds, but in this case, it's really, really extreme. Now, here is what I'm worried about right now. And I mentioned this to you yesterday, and it's only getting worse. This is the put-to-call ratio. The put-to-call ratio is very instrumental in picking up overbought and oversold markets, but only when they're really, really stretched out. And I only look at this. It's really mostly noise. Let me go beyond 3 months. Let me go to 10 months. If you go right here, you'll see that most of it is noise. But when it's at 65 or lower, I pay attention to it. And when it's at 1 or higher, I pay a lot of attention to it. And right now, it's looking like it's stretched out. And that's telling me that the stock market may not necessarily go down a lot, but it doesn't have a lot of upside, especially in light of the momentum levels. And I don't want to get into momentum levels because I've been showing them to you almost daily. Now, in terms of the overall stock market, we've got the SPY, which is hovering right near all-time highs right now, as you could see that. But you see this trading action, it's very sheepish. It's very kind of, there's very little rhythm, volatility, or anything really in here that makes a lot of sense. It's just very, very calm. It doesn't have that typical volatility, that movement. That's because the market is stretched out. And if you want to see more of that, look at yesterday's video. I showed you the momentum levels on that. But again, the biggest factor today is going to be the CPI number and the jobless claims. The CPI is going to be very important because consumers' price indexes is one of the biggest factors of inflationary pressure. And the consensus is 0.4. Keep your eye on the number. Previously, we had 0.8. Now we're expecting 0.4. If we're on that level, we should be looking okay or a little bit higher. If we're below 0.4, may not be so good. Again, it's all about being in a sweet spot right now. But with the put-to-call ratio showing us such grossly overbought levels, I actually think a few stocks that are vulnerable right now are going to go lower. So instead of picking upside stocks, I'm looking at downside stocks. One stock I'm looking at is Pinterest. Remember how hot Pinterest was? Well, if you look at it over a year, the highs have been getting lower. It's now barely able to generate above the 50-day moving average, and I would be selling this stock right now. It already went below the 200-day line, and now it's above the 50-day line. I would be selling it right around the 65 level, covering it if it goes above the 50-day line. So Pinterest does not look like a stock I would be buying right now. Not at all. Another stock that's on my chopping block is Grubhub. Now, again, you can buy puts. You can do nothing. You could short this stock, or if you're long these stocks, you could liquidate your position. So again, I just want to make sure you're aware of these. And if we look at it on a long-term basis, they just don't look good. The highs are getting lower. I'm always looking for the highs to get lower. On pin interest, look, higher high, lower high, lower high, lower high. Look at Grubhub. Lower high, lower high, lower high, lower high, higher high, but then it really craps out. So again, I would be looking to fade this, not buy this, but to fade this. The 50-day is below the 200-day. Whenever that's the key, whenever we're trading below the 50-day and the 200-day, you always want to go bearish. So again, I think this asset is going to go down, and the put-to-call ratio is grossly overbought. And even if we do get some upside from the stock market, I think the S&P, honestly, the small caps I think will go up, but the S&P 500, I honestly think it's just going to be kind of choppy, and come back down. I don't think there's a lot of upside on the S&P right now. So you've got to be really careful. But on the Russell, on the other hand, there is substantial upside because, again, it's been kind of just doing nothing for, look at that, it's been moving up, and it's been doing sideways. Anytime an asset goes sideways, there's a good chance it'll rally. The longer something stays sideways, the higher the odds are it's going to change its bias. The longer something stays vertically, the higher the bias that it'll change to horizontal price action. So again, the Russell has been pausing while the S&P has been moving higher. So there's a much higher chance that the small caps will start rallying, especially if we go above this level right here, the 234.9. If we break above 235, the Russell is going to start trending again, especially if interest rates are going to go lower, and I think we're going to get a good indication today of that during the announcement that's coming out in less than 1 hour. Now, I've got something important for you, something timely, something you need to pay really, really close attention to. Tom Busby, he's widely known and considered one of the top traders and researchers in this industry. So when he said a 4-day window is the most important ingredients for a string of triple-digit winners, not single-digit winners, triple-digit winners, it got my attention. Now, Tom explains how the same window repeats every week, and that's how he's delivered some of his best trades of the year. Plus, it completely removes traders' weekend risk exposure. When was the last time you went on Friday into the weekend not worried about market? That's what he's talking about. And that's critical in these volatile markets. It's easy for them to fool you into thinking something's happening when it's not. Now, traders will also get access to Tom's Market Never Sleeps bonus report. Man, I love this. This shows people exactly how he analyzes the markets, revealing how these trades take. This report is a great resource to teach the foundation for many of these strategies. Are you ready to find out how everyday traders, just like you, can enjoy long weekends every weekend without worrying about what will happen on Monday's open? Man, that sounds really good. In on Tuesday, out on Friday. Repeat after me. In on Tuesday, out on Friday. Click on the link below, see how it's done. And folks, make sure to like this video, subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when I post new videos like this. And have a great day, and I'll talk to you tomorrow. Bye, guys.